The beauty in owning REITs is that you can invest the amount you want to invest at very minimal risk. Plus, you don't have to worry about real estate taxes, furnishing your unit, finding a tenant, paying the bills, because Ayala or Robinsons will do that for you. Hey guys, Alex here. Welcome back to my channel, a channel about real estate, personal finance, and business. In today's vlog, I will be sharing with you why you should invest in REITs this 2021. But before anything else, please smash the like button for the YouTube algorithm and subscribe to my channel so that you will be notified if I have new videos like this one. What is a REIT? REIT stands for Real Estate Investment Trust, and it has been in other countries for a long time. The first REIT was established in the US in 1961, so that's more than 60 years ago. A REIT is a company that owns, operates, or finances income-producing real estate. REITs give investors the chance to own income-producing real estate at a very low entry level. You need millions to buy a piece of real estate, but if you're just starting out in life and you don't have this money yet, you can still invest in income-producing real estate through REITs. So what REITs do is that they pool the money of investors to buy even more income-producing properties. You can invest in REITs through the purchase of individual company stock, through a mutual fund, or exchange-traded fund. Once you become a stockholder, you can then start earning through this real estate investment without actually having to go out and buy the property yourself. This means you can have lower capital outlay and no management expense. There is also no need to go out and get a loan to buy a property, since with REITs you can invest any amount you want. REITs invest in various real estate property types such as offices, warehouses, medical facilities, apartment buildings, commercial centers, hotels, and food outlets. Some REITs focus on a specific type of property. Ayala REIT, for example, or AREIT, focuses on commercial buildings that lease out to BPOs, since the BPO industry is very strong here in the Philippines. So how do REITs make money? REITs make money by leasing space and collecting rent. The income is then given to shareholders in the form of dividends. REITs are required to pay a minimum of 90% of their income to shareholders. The money generated by selling REIT shares is then reinvested by the company to buy even more income-producing real estate. So think of REIT as rental real estate on steroids. How does a company qualify as a REIT? To qualify as a REIT, a company must first invest at least 75% of its total assets in real estate, derive at least 75% of its gross income from rents from real property, interest on mortgages financing real property, or sales of real estate. Next, it must pay at least 90% of its taxable income in the form of shareholder dividends each year. Next, it should be an entity that is taxable as a corporation. It should be managed by a board of directors or trustees. And it should have a minimum of 100 shareholders and have no more than 50% of its shares held by 5 or fewer number of investors. Now, why invest in REITs? Historically, REITs have delivered very competitive returns primarily because its income is based in real estate rental. Another thing to note is that these tenants usually have long-term contracts between 5 to 10 years, and which lead to very stable income flow. Aside from rental income, you can also earn through appreciation, since real estate properties increase in value over time. And since there are so many types of real estate that REITs can invest in, such as commercial, residential, industrial, you can really diversify your portfolio to make the REIT more stable. The beauty in owning REITs is that you can invest the amount you want to invest at very minimal risk. Plus, you don't have to worry about real estate taxes, furnishing your unit, finding a tenant, paying the bills, because Ayala or Robinsons will do that for you. And as I mentioned, REITs are required to give 90% of the income back to stockholders. So you can easily buy or sell your REIT, no hassle, no operational cost. According to property consultant David Lichu, REITs are the cheapest and most efficient way to own real estate. So here are the REITs to look out for in 2021. Ayala was the Philippines' first REIT that was launched in 2020. I talked about the benefits of investing in AREIT on one of my vlogs. I'll put the link down below in case you want to check it out. And we were ourselves able to invest in REIT during its IPO price. And we are very excited to invest in more REITs because a lot of more companies are planning to launch its own REITs this year. So companies that will be launching REITs in 2021 are Double Dragon, Robinson's Land, SMDC, Mega World, and Ortigas Land. I am especially excited to invest in SMDC's REIT because they have such a wide and a large variety of real estate assets. They have banks, tollways, food chains, malls. I mean, how many Jollibees are here in the Philippines and even abroad? How many BDO branches or SM malls? Imagine if they put all those in a REIT. So your income as a stockholder is practically guaranteed. There are so many ways to invest your hard-earned money. Personally, since I am in the real estate industry, I can say that REITs are a very stable form of investment. However, don't take my word for it. Read more articles on REITs, watch more videos, do your research. Because whatever you decide to invest in, it's important that you yourself understand what you're getting into. Because ultimately, you are responsible for your personal finances. So I hope you learned something new today, and if you did, please show me some love, hit the like button, say hi to me in the comment section, and subscribe to my channel, and I'll see you in the next video.